Goldman Sachs just came out and said that Chinese stocks could run potentially by 20% in this current year. And so that's what I want to dive into in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. So Goldman Sachs came out and said that Chinese stocks could potentially run by approximately 20% this year. And so what I want to do is I want to assess sort of like what they're saying and then review that against the two models of Chinese companies that I have, which is Alibaba and Tencent. And so let's do that now. So you can see here in this article by Barron's that Goldman Sachs came out and said that, because of China's reopenings, it could booster the company stocks by approximately 20% over the next 12 months, as per Goldman Sachs. And so really what they're saying is that, as the stock market shifts away from the reopening theme and it moved towards the recovery theme, he believes that that will be a driver of potential gains, which likely rotate from multiple expansion, which effectively is the reopening play, to earnings growth and delivery. And so the real point there is that the onus is on Alibaba and Tencent and all other Chinese companies to really show that earnings growth. And so, this is where the whole company pulls together and, the whole country comes together and pulls earnings higher. However, on the backdrop of that is a potential global recession, which is what I keep talking about all the time on this channel. Now, things are looking a little bit better than we originally thought they could. There's more indications that a soft landing could be pulled off. I still am not a believer. The yield curve remains inverted, and so we'll see how this plays out. But that could impact China negatively, and so don't expect that to be a non-issue. However, if these Chinese entities can prove out earnings growth and just sort of resume their trajectory, not even at the same levels that they were previously, but just somewhat of a growth trajectory, you can see these shares surge. And from my opinion, I think Alibaba has a greater opportunity to surge more than a company by like Tencent. And so I'm going to prove that with the models I'm going to show you in a second. But keep in mind, guys, this is just my opinion. I'm not telling you that these things are going to surge. This is not like investment advice in any way. And so, take my opinion with a grain of salt and let me know what you think in the comments below. And so the first thing I want you guys to be aware of is that Alibaba is actually going to be reporting this week. So in a couple of days. And so they're going to report in the morning. So I will do sort of like a first look like I always do. And hopefully we can get some good understandings from there. Now, I will put out a preview video for the quarter as well. I'll probably do that tomorrow or the day after. And then we'll go from there. So just FYI, Alibaba is reporting this week. Now, just moving into the model that I have for Alibaba, which you can get access to if you have access to that lower tier of the Patreon. You just click into the Alibaba ticker symbol on the tracker. Overall, in fiscal year 2023, I think I'm a little bit too conservative here, but I'm expecting weakness in fiscal year 2023. Keep in mind, guys, that they're 2 quarters into their fiscal year 2023, so they only have 2 more quarters. So I just expected the reopening to be a little bit slow. And so, China commerce, or just total China commerce as a whole, I expected to go backwards this year. We'll see what happens over the next 2 quarters. I actually think that they can significantly outperform this. Even if they get this to a 0, I think the stock surges. And so we'll see what happens there. I think there's a lot of optimism going into this. And so overall, I'm not expecting revenues to go back significantly, just a 1.6%. And then, the surge, revenue growth continues in 2024. Notice how conservative I am here. They grew at 40% overall revenue in 2021. It slowed down to around 20% in 2022, and I'm bringing it, under 10% in 2024. They could absolutely surpass this considerably. And, these great companies like Alibaba, they're really good at outperforming. And so, my valuation of 225, it could be very much on the low end, but I tend to be conservative with respect to my valuation. And so what does that mean overall for the valuation? Well, you can see using a terminal rate of 11.5% and a terminal multiple of 15 times earnings, I'm forecasting the company's valuation to be around $225 per share. And, around $40 a share of that is just what I believe to be excess cash. So 40% of the current share price is effectively excess cash. And so I think that there is potential, I'm not telling you for sure, because once again, this is never investment advice, but I think that there's potential for the share price to run, considering the fact that it's trading, in my opinion, at a percentage of valuation at 44%. So, can this run to 150 this year? I think that could happen. There is a scenario where that I could see that happening. And so, Is the Goldman Sachs guy right here? Yeah. Well, can it run 20% to 120? Absolutely. I think it got close to there. Once again, it's just my opinion, but I think by the end of this year, it could very easily get to 120 if they show good earnings growth in the next 2 quarters of earnings. So we'll see how that plays out. I want to know what you guys are valuing Alibaba. Am I too low relative to where you guys are valuing it, or where are you guys falling with respect to Alibaba? Also, what do you guys think in terms of the company's share price performance? Does it continue its surge that you saw thus far in 2023, or does it pull back? Is there an opportunity for this thing to come back to $80 per share? I would say, at least in my opinion, and just for my own portfolio, if it does go under, like 80 bucks a share, once again, I will probably triple down again. I might even go a little bit heavier just because I'm in a larger cash position right now than I was last year. And so we'll see how this plays out. But once again, I always tell you guys, and I do it for myself, focus on diversification. Make sure that it's not a greater than reasonable part of your portfolio. And once again, not investment advice, always talk to your investment advisor. Okay, let's move on to Tencent. So just an FYI, guys, Tencent is actually looking to report their Q4 2022 earnings on March 22nd. So that's a bit more than a month from now. And so just FYI, so you guys are aware. And then of course, I'll be updating my Tencent model for myself at that time. I really would like to incorporate Tencent into the portfolio. I just haven't had the opportunity just yet. And, overall, you can see that Tencent, in 2022, I do expect the total revenue to go backwards a little bit, led predominantly by their games and social networks. Remember that their value-added services are approximately 50% of the company's revenues. Also, online advertising is expected, or I'm expecting it to go back. And so, overall, I think total revenues do go backwards a little bit, but then notice that I do expect a somewhat of a recovery and a surge in 2023 and 2024. Look, online advertising can come back very quickly. Same with games and social networks, especially if the CCP takes their thumb off of those segments, and they look like they already have. And so, we'll see how this plays out. I do expect profitability to remain at the lower levels. So, in the low 40s, I don't want it to get back up to the high 40s like you saw in 2020. And so I'll leave the profitability at that level. And so what does that mean overall for the valuation? Well, it's a little bit more pricey than Alibaba. I do give them a higher terminal multiple because I just feel like they're more future focused than Alibaba is. And they have less competition, I would say, in their segments. It's not like they don't have competition, but it's just like easier, I guess, because they're so much further in their sub segments. And so I would say that it probably gets a higher terminal multiple. Plus, they can raise prices at a rate higher than their costs would go up. And because it's primarily a digital company, right? It's probably one of the best run companies in the world. In fact, Microsoft is trying to buy Activision predominantly to compete with them in the mobile game segment. And so, this is an exceptional company, and I do want to add it to my portfolio eventually. And so, based on the current share price, I'm valuing the company at approximately 80% of its intrinsic value. So once again, not investment advice, it's not a real forecast. It's just my opinion that I think it has less room to run than Alibaba, but it still does have room to run in this current year over the next 12 months. And so if they show strong revenue growth going back to their original trajectories, you can see, I think, there's a world where I can see this running up as well. Now, guys, I just showed you the Alibaba and Tencent models, and you can see you can actually get them right here on the tracker, which is what you get access to when you join us at that lower tier of the Patreon. And if you click right here, you can get access to the Alibaba model. And I've hidden the other ones, but Tencent is here as well. You can click right into those models. And so how do you get access to that tracker? Well, you can get access to all of my research at this lower tier of the Patreon. And if you want to join us for a really good live presentation every month where I walk through the macro, I talk about sort of like what I'm seeing and what sort of opportunities are presenting themselves, you can join us at this higher tier. Now, I recently put out what I think is a very important video on how you should be really thinking about debt as it relates to value investing. And so if you haven't seen that video, take a look at it. I'll link it right here.